What if one trade could turn $100 into $1,200? Stay tuned because I'm going to show you how to find the best fair value gaps, set up entries with Fibonacci, and use a trailing stop strategy for a 12-to-1 risk reward trade or a 12x. Let's get into it. All right, today everyone, we are diving into the nitty-gritty of fair value gaps. I'm going to show you a couple of secrets about fair value gaps many people don't talk about or even know about. So you're first going to learn what a fair value gap is and how to identify it, what are invalid fair value gaps, and what are valid fair value gaps. So this can really help improve your trading to know when to enter trades and when to exit trades. It's another Confluence built in just to help increase your win rate as you get better and better. So first, how do we identify fair value gaps? So you are going to have 3 candles right in a row, okay? And you're going to have bullish fair value gaps, you're going to have bearish fair value gaps. So we're going to have a wick, usually, or just a candle, and another wick. And if it doesn't close, so let's say this candle actually went all the way down here, that would not be considered a fair value gap because there's no gap in between those candles, right? So we do have a gap here, and you'll see this line matches with this line, and this line matches with this wick here. So that creates a gap right there. And usually with these gaps, you'll see the movement come back down to these gaps, and usually it's at the midpoint or halfway point here, and that's usually a good spot for entry on a trade. So you'll notice the same here with bearish fair value gaps. You'll have this wick here and this wick here, creating that gap there where these candles can sometimes come up and re-enter at the midpoint for an entry. Let's move to a chart in TradingView here. I am just on a 1-minute time frame on Solana. So here we could see a bunch of different fair value gaps right away. And this just takes some practice to getting used to, but eventually you'll just be able to spot them out and see them. You'll see we have this big one here. So this one actually doesn't have a wick on this candle. However, if we take our fair value gap here box and we move it down to this wick down here, this creates a fair value gap. And sometimes it'll wick right through this midpoint here. Other times it may just come up and then continue back downwards. This is just basically an imbalance in the market. And this shut down so far, it has to come up and retest this point to grab any other sellers basically there. So it comes up, grabs them, and then continues its downward move. And sometimes this fair value gap will get broken. It just depends on the market, especially if you're on a lower time frame. It's harder to tell. If you move to higher time frames, you're going to see less of them. So if we go to a 15-minute chart on the same time frame, so that was the 1 minute, right, with all those candles there. But if we move to the 15-minute and we keep looking, and here's one that's bullish, so we can draw from this wick down to this wick, you'll see it just shot right through it. So this is a very invalid fair value gap. And this is going to be totally different when you're live trading, because you'll see here, you could determine on the 15-minute, hey, I'm probably in an uptrend. I have a good change of character here. We have some big, large candles. However, it did come downward and just break through. So normally you'll see a lot of people will set their stop loss right below the fair value gap so they're not losing money or getting liquidated here. For instance, we saw this uptrend, and this is just on the 15-minute for an example. If we saw this uptrend, we have a change of character here as well. It did eventually break. It had some resistance, but this kind of broke it. And this actually could just be considered a liquidity sweep. I'll get into that more of videos, but basically it comes up, it'll take out this and sweep liquidity and then continue on its downward trend. Overall, we've been in a downtrend, but if you're playing lower time frames, it's going to switch on you consistently. So you're going to have uptrends and downtrends really quick that you need to play. So this would be considered probably a liquidity sweep here, but I'll save that for another time for a video. So if we were going to go long on this, let's say we wanted to enter on this fair value gap. And a lot of times with these, because there was such a big pump up, it will come back down. How far down? That is hard to tell, right? It's the market. And it can do whatever it wants. You do not matter to the market. So a lot of times people will put their stop loss right below the candle of the fair value gap, or even just right below the fair value gap. Because once it kind of breaks, especially like this, you have all this downward momentum on these candles, you can pretty much predict it's going to go down farther. So if you were trying to get out here, you might have doubled your loss. And this will not make a profitable trader, right? This is why you always want to make sure you have your stop loss set with your strategy and you're not breaking that rule. Because if you break that rule, you will not be a profitable trader. And I guarantee that. So let's say we have the stop loss. I would put it right below either the candle here or a good resistance point of this fair value gap. And usually I go for a 3-to-1 risk reward ratio in order to maintain profitability as a trader. So that's the standard. You can always go 2-to-1, just double your money. So you can also go 1-to-1 if you want to get in and out of trades really quick. I don't think it's the most profitable strategy, but you can always try it and see how it goes. But usually traders are aiming for that 3-to-1 risk reward ratio, as you'll see on this long box here. So when you do set your entry on fair value gaps, so this is a good little place right on that midpoint. Other things you can do to match up that confluence is using your Fibonacci. So if we do a retracement Fibonacci here, and if you grab your tool off to the left-hand side, you'll see Fib retracement. And we can actually go from bottom to top. And usually you want your 0.5 matching up with that fair value gap. As you do see, it does do that here. It just didn't work out for this trade. Like I said, you're looking for a 30% win rate. So all of your trades are not going to win all the time. You just have to take the losses, make sure your stop loss is set in place. That way you will remain profitable. So if you are looking for more winning trades, I would say you're going to have valid and invalid fair value gaps. So if we take a look at our chart here, we do have a fair value gap from this point to that wick there, and it does come down and hit it right here. But this would be considered not a valid fair value gap. So it came down, broke it, shot back up, which is fine. You can get out of there. And as you'll see with the recommended stop loss here, see this? And if we would have put our stop loss just below the actual fair value gap candle, this candle here, we would have just barely not been stopped out. So that's why a lot of the times it's usually the candle of the fair value gap where you put that stop loss at. So if we would have put it like here, and this is a very tiny stop loss, so I wouldn't recommend that. I would usually go with the support or resistance areas. So usually it's just that candle, but we would not have been stopped out here. And we could have continued upward to go ahead and hopefully hit our profit, which this is 3-to-1. So that would have been a profitable trade, surprisingly. It did break this fair value gap. So let's say it comes down, tries to retest this fair value gap. This is not considered valid because it already tested it, it already broke it and everything and went back up, and now it's just going to continue downward past that. So even here on this one, wick to the bottom of this candle, you'll see here how invalid this is. So let's say we were going to go bullish because we have this little uptrend here and we have this large bullish candle, possibly signaling the beginning of an uptrend. However, that did not happen. Why that didn't happen and why I would not take this as a beginning bullish trade is it did not break this high. Okay, did not break this high, signaling it. So we'll see here, came down, tested the fair value gap, came back up, tested it again, came back up, tested again. So you don't want to be taking a long on this trade because it has tested it so many times. So you don't want to be entering at the midpoint the second or third time here trying to take a long. You could use this as an additional confluence to maybe take a short. I haven't tried that yet, but just an idea as I was thinking out loud. So you can totally play this way and entry and exits on fair value gaps. So let's say another confluence, like I said, let's draw our fib from this bottom to this top here. This is what a lot of people do. You'll see there's that 0.5 again, almost matching up with that midpoint perfectly, which is usually your entry on a fair value gap based strategy. So that is usually where you would enter at. but you'll see it just continued downward after that. So you could even play because, like I said, you saw this break, could start taking shorts on this. Now, the next thing I want to talk about are high priority and low priority fair value gaps. So let's just move to a higher time frame. I'm actually going to show you a free indicator here. If you are just starting out, this can become helpful. You can just type in fair value gaps, and it's by Lux Algo there, and you can just click it and it will pop up on your chart. So you'll see a bunch of fair value gaps appeared for us, which is nice. This indicator does miss fair value gaps sometimes, so it doesn't catch them all, but that is what this indicator does try to help with. So to find high priority areas and low priority areas, and in fair value gap world, these are better entries versus worse entries. Not terrible entries, but sometimes they don't always work out if they hit those low priority areas. So you can go over here to the Fib retracement tool, grab the GAN box, and this will show you high priority areas and low priority areas. So we can do our settings. We have a 0.5, we have a 0, a 1. When you originally pull this up, there's going to be all these points selected, which you don't really need if you're just looking for this. So we'll go ahead and hit OK. And what we're going to do is we're going to draw this GAN box from the bottom to the top. And there's a lot of good points on this fib you could probably hit. But let's just see. I'd probably go here to here. We have this nice fair value gap right here. You'll see it lines up perfectly with that 0.5. So you could mark this as an entry, right? So here's our 0.5 on the GAN box. This would be considered just barely a high priority area. This would be a better fair value gap. However, it is tiny, and I usually see these ones break a lot, so that's not usually my favorite thing to play. I usually see kind of the medium size or the bigger ones, something more normal size, doing a lot better for entry levels, not these little tiny small ones because you're on the 1 minute time frame. It's basically not noticeable on the other higher time frames. So usually you want a more normal size fair value gap. But you'll see this fair value gap is technically right in our high priority area, so it would be a good fair value gap to take a trade on. We also do have a change of character here. So you'll see this candle, flip this low here and this low here. So we can now consider this a change of direction, okay? We were in a downtrend and now we're moving up. So this would be a good area to potentially take a trade and make a lot of profit, right? So there's our 0.5 on our fib, if you wanted to use that instead. So we can put our entry there. We'll set our stop loss right below that candle on the fair value gap. And let's play it forward. We would only be looking for a 3-to-1, but because this wave is so new, which is awesome, usually when a wave is just starting out like this, you have a chance to really capitalize off of it. But all you really need to do is aim for that 3-to-1 risk reward ratio or the next support resistance area, which would be considered probably this area here. There's a lot of resistance going on. So it could bounce around this area a lot. That's probably why you want to get out. But you could target even on that midpoint here for your profit, right? You'll see it came up and hit a little bit higher, and it really shot up, went all the way past this resistance area, and it's going even higher. So you can really, when a wave's first turning around and making a reversal like this, you can really capitalize off these and make a lot of money. As you can see right here, we're at a 5-to-1 risk reward ratio right now. So another way you can calculate your profit on these trades. So if you're playing this role, say, draw our fib, top to bottom. Here's our 1.272 area for a take profit, and our 1.618, another great area to take profit. You'll also see here, we have a bearish fair value gap. So this is another confluence of a good area to take profit. So we'll see if it keeps moving up to that 2.272 or not. You can even scroll across on your graph to see if there's any other resistance. There is a lot of resistance at this 1.618 on this spot. So I would probably have it around there, but that is me. If you're playing on the 1 minute time frame, it goes back and forth a lot, and you're just trying to get in and out of trades usually. So we'll see. So it's going right up to that 2.272, even higher. So that would be an awesome trade, hitting that 2.272 if you're playing with $100. Let's see, that is 12. So 12 times 100, you could have made $1,200 there if you're risking $100, which is insane. That's 12x. So very nice play here. Another rule of thumb you can play if you're trying to follow this trend line all the way up and you're trying to get those risks to reward ratios even higher, like we saw here, that 12-to-1, you can follow it all the way up and make sure it doesn't break these fair value gaps. So you'll see when it came down, it didn't break. It didn't have any fair value gaps here. Had one here, didn't come back down and hit it. It hit this one, but didn't break it. So we can move our stop loss along with this. So we can move our stop loss just below, and we're just moving up as the chart's going up, just below this candle. So now we're moving our stop loss, kind of a trailing stop loss here with this fair value gap in this candle. So if it does come back down and it reverses on you, you're still getting out around the 1.272. However, it came up, just hit this fair value gap, still continued up, another little fair value gap, didn't even hit that one, continued up, hit this one a little bit, just at the top, and went up further. So you're basically just trailing your stop loss after this, following the fair value gaps. And if they're not breaking or anything like that, you can just simply trail them. So we would trail this fair value gap as it goes up. Here's another little fair value gap. You just move our stop loss below this candle, keep trailing, you're still going up. And this is how you hit that 12-to-1 risk to reward ratio. So you have this one, didn't hit it, kept moving up. So you're still trailing it. And now is where it broke. So if your stop loss was moved all the way up here, let's say your stop loss is just below this candle now. So if you saw it move up this far, it's probably going to take a turn on you here and go back downward. And you can just follow that fair value gap rule just by following up, making sure they don't break to get that extra risk to reward ratio if you didn't want to set your take profit levels right away. Because I get it. People get mad. They're like, oh, I could have had all that. Dang, I could have had $1,200 as opposed to this, what, measly $600? It is what it is. It's trading. But here's this fair value gap as officially broke it. I'd probably be getting out. So didn't hit our stop loss. It keeps going up. It hit the 2.272. It's got to break it. There it is. Okay. I was going to say if this goes again. But usually you're looking at these take profit levels of 1.272, 1.618, and 2.272 is honestly the highest I really see it goes on the 1 minute time frame. So those are what you're normally looking for. Like I said, if you're entering that wave pretty early, you have that chance to really capitalize off that huge turn. And then, like I said, just follow those fair value gaps up, trail your stop loss just below those candles of the fair value gaps. That way, if it does come back down and turn around on you, you're not losing a bunch of profit and you're making a lot more. So you're still even above this 1.618 here, making a lot more profit. So what we started back here, let's say it broke our stop loss there. So our profit would be, we entered on this first fair value gap in a high priority area at the 0.5, a lot of confluences there. And it got us out right there. So we still have a 12-to-1. That's how you play the high priority Fibonacci, the 0.5 mark, and trailing a stop loss to capitalize and really gain some money off these trades if you are looking to take a strategy like this with fair value gaps. I play with fair value gaps personally in my own strategy. It's just one of the many confluences I look at. So something I highly recommend. And do some bar replay. You can simply test bar replay here in TradingView. You can take off your Lux algo indicator if you want. And you can just hit a random bar, do some practice trades, and mark it in, see how it turns out. Let's go like here. So you can hit like a random bar replay, it'll take you to the middle, and you can start marking areas where you see fair value gaps for practice if you want. Once again, that Lux algo indicator is there. However, it doesn't catch every fair value gap, so beware of that. But it hasn't really mattered to me. I've usually just used their indicator just to spot it quickly because I'm on the 1 minute time frame and it's moving fast. So I'm trying to enter quantities and see all the other confluences and things like that to enter trade. So if you guys do have questions about fair value gaps or other smart money concepts, please let me know in the comments below and let me know what you want to see next.